Prices down during the cost of living crisis. Good morning, this is Inking Live, an hour of business and economic news from the heart of the city. The Activision Blizzard, the American computer games publisher, has reacted with fury after the Competition and Markets Authority blocked its near $70 billion takeover by Microsoft. The company, whose game titles include Call of Duty, Overwatch and World of Warcraft, said the decision showed the UK was closed for business, while Microsoft said it reflected a flawed understanding of the way the market and the way the relevant cloud technology actually works. Well, joining me now is Sarah Cardell. She's Chief Executive of the Competition and Markets Authority. Sarah, welcome to you. Microsoft, I thought, coming dangerously close there to saying you don't know what you're doing.
Well, we certainly do know what we're doing, and we have done a very thorough investigation. Our investigation has taken over 6 months. We've looked very carefully at all of the evidence, and we have concluded that the right thing is to keep this market open for competition and make sure that a whole range of businesses can compete effectively in this market as it grows and develops.
One thing that raised eyebrows was the fact that you alighted on the cloud market in particular. I mean, this is quite a nascent market, and a lot of people are not necessarily playing games through the cloud at the moment. Is this something that you've a decision you've taken with an eye on the future, perhaps?
Yeah, so you're absolutely right. We focused in on our concerns in cloud gaming, and it is an emerging market, but it's one that's growing rapidly. The number of users has tripled over the last couple of years. And we see this as an area where it's really important to keep competition open, to make sure that a whole range of competitors can get in and can develop their products to offer the greatest range of innovation and choice for businesses. So what we saw was that Microsoft already has a very strong position in cloud gaming. They combine their position across Windows, across Xbox, and across their cloud infrastructure. And the merger would have brought that strong position together with the really strong portfolio of games, as you mentioned, that Activision have. And that would have had an impact on the ability of other cloud providers to compete effectively in this market going forward. So we wanted to make sure that this market was able to deliver real innovation and real choice going into the future.
A lot of people were surprised that you didn't have an issue, though, with the consoles market, even though there's evidence to suggest that Microsoft has been talking about making some games exclusive only to the Xbox and shutting out the PlayStation.
So we looked carefully at that aspect of the deal as well. And as you may know, in our original provisional findings, we did identify potential concerns in that market, but we considered the additional evidence that came into us and we concluded that those concerns were not necessary. And we focused instead on the concerns that we found in cloud gaming.
Now, Microsoft and Activision Blizzard are unhappy with the remedies that they proposed you didn't go along with and vice versa. Is there any room for horse trading there, potentially?
So we've done a very thorough investigation, and as part of that investigation, we gave very careful consideration to the remedies that they put forward. But we concluded, on the basis of all the evidence that we saw before us, that those remedies were not sufficient to ensure effective competition in the market going forward. What we have done through our decision is make sure that that market remains open to effective competition.
I mean, they thought some of the remedies that you would regard acceptable, such as hiving off Call of Duty, were unacceptable.
I think what is important here is to make sure that the market remains open. So the remedies would have introduced a regulatory oversight of this market. That is not really the way you want to see a new dynamic market emerging. You want to make sure that that market is truly open to competition. And we think the better option is therefore to prohibit the deal and let the market develop fully and freely in the way that it should.
Are you concerned about these comments from Activision that this decision essentially suggests the UK is not open for business?
That Microsoft and Activision clearly have their own commercial incentives for getting this deal through. But I fundamentally don't agree with those comments. Actually, what this decision shows is that the UK is very much open for business, and it's very much open to investment because we want open markets that will thrive, that will attract strong investment, that will deliver lower prices, greater choice to consumers, and also allow a full range of businesses, including UK startups, to flourish and grow in these markets.
Activision's chief executive, Bobby Kotick, says you've been co-opted by the FTC's ideology. What do you say to that?
I say is that the UK and the CMA is here to protect UK businesses and UK consumers. We take our decisions based on the evidence that we have seen. We have identified a competition problem in this deal, and we have taken action accordingly.
All right, Sarah, we have to leave it there. Really appreciate you joining me today. Thank you.
Thank you very much.
Now, the new Director General of the CBI says she's confident the business group will win back the trust of members and ministers within 6 months, but admits it will have to completely change in order to survive allegations of sexual misconduct and a toxic culture. Well, Ray Newton-Smith began work at the CBI this week with its future in doubt following allegations that 2 employees were raped by colleagues. She's been speaking to our business correspondent, Paul Kelso.
I'm determined we'll definitely be at that table in 6 months' time. We need to be, right? Because that's what our members want from us, and we're a membership organisation.
Are you really confident CBI can survive to be leading those conversations?
I am really confident the CBI can survive. It's not going to be the same CBI that we've seen over the past few weeks, for sure, and it's not going to be the same organisation that's been there. We have to completely change, and we will.
Were you aware of any of this toxicity in the world? Did you have any concerns that this kind of thing might have been going on when you were working here?
Look, when I was here, you know, if people raised issues with me, I supported them. And I think, and look, this is really challenging, right? And when things happen to an organisation, and the stories we have heard are so harrowing, right? And everyone feels them really deeply. They're shocking, they're painful.
What practically do you do to start changing the culture?
I think it starts with listening, right? And I think it starts with humility. And I think that's, you know, what's really hard coming into this job as a leader is I have to come into this job and I've got a staff, you know, and people who are broken, who've gone through a really, really terrible time. And I think what is difficult in this organisation in particular, right, is when things happen, it's in the news every day. People wake up and read about themselves, their organisation, their staff every day in the newspapers, and then they have to come in and deliver their job. And it's really, really tough, and it's really personal, right?
Now, the government is set today to publish its long-awaited gambling white paper, setting out tougher regulations that it says are fit for the digital age. Campaigners are calling for a levy on gambling companies, affordability checks and maximum stakes for online slot machines. Well, the Culture Secretary, Lucy Fraser, says the changes will redress the power imbalance between punters and operators. Well, joining me now to talk about this is Neil Banbury. He's UK General Manager of the gambling operator Kindred Group, which includes brands such as 32 Red and Unibet. Neil, welcome to you. Do you accept that there's a need for tougher regulation?
Yeah, good morning. Thank you for having me. So look, we really welcome the white paper today. We support the ambitions to bring the regulatory environment into the digital age. And obviously we wait to see the full details of it later today. But, you know, we obviously are expecting a comprehensive set of reforms, and we look forward to continuing to contribute into the debate to help this impact customers in the best way, but also to ensure the UK is as safe as it possibly can be for those customers.
There's a punchy piece by Lucy Fraser in the Times today. She says gambling companies are exploiting addicts and disproportionately hitting poorer communities. What's your response to that?
Yeah, look, our business model is rooted in sustainable play. You know, we're a listed business and we are heavily incentivized that our financial results are sustainable. And so, you know, our investors expect us to deliver sustainable financial results, and they expect us to have a meaningful sustainability agenda. So we're working very hard on that. As a business, we've been public now for a couple of years with our journey towards zero, which is our ambition to achieve 0% of the revenue from high-risk behaviours. We've made strong progress on that. We're down to 3%, but that clearly indicates there's still progress for us to make, but it's a journey that we're very committed to. We share our progress and we welcome collaboration and contribution from anyone that can help us on that journey.
Can you live with a maximum stake on online slot machines?
Yes, I also think it's really important here that we acknowledge that we're not starting from a standing start on some of these issues. So we have been trialling maximum stakes on our slots over recent months and quarters. We've been trialling even more sophistication than that, where we can have different slot limits depending on the profile of the product and the profile of the customer. And so we're actually starting to build up a lot of data now that's going to be hugely valuable, I think, for us to contribute into consultations around things like slot limits for moving forward.
It is the case, though, isn't it, with some of these online games, the rapidity of these games mean that you can lose a lot of money very, very quickly, far more rapidly than you can in a physical environment.
I think that used to be a lot more true than it is today. Today, there are also significant controls in place around some spending limits and thresholds where further checks need to take place. So again, there's going to be content, hopefully, in the white paper that allows that conversation to evolve. You know, we know so far there are things that have proven very effective that we're doing in terms of being able to create an environment where harm minimization is a core part. But we also know that there are certain things that we're doing that is not having the effect of keeping sustainable play within a licensed environment. So again, that data that we're collecting is going to be hopefully very valuable evidence as the government now moves to consult on some of the specific issues they're looking to address with this white paper.
Now, we're told that there may be a 1% compulsory levy on gambling company profits to help treat addicts. I mean, bearing in mind what you've just said about being a listed company and shareholders having certain expectations of you, can you survive that?
Yeah, absolutely. Look, the industry has made commitments to funding anyway, and we've been moving in that direction. For us, the most important thing with any monies raised in this way is that it goes to fund or continues to fund the charities that are doing very valuable work in this space already, and also that it funds truly independent and evidence-led research. That's a good thing for the industry. So we're not overly concerned with that.
A number of MPs have expressed concerns that the legislation may be watered down following campaigning by groups such as yourself. How much have you spent on lobbying?
Yeah, look, I mean, we have looked to engage with the government as this white paper process has evolved. That will continue to be true through the consultation. I think it's really important here to acknowledge that there's a very fine balance to try and strike with gambling regulation. It's a pastime that's enjoyed by millions and millions in the UK, and the industry will acknowledge that there are problems and there is harm that can be caused, but it's at very low rates. And even though, the harm itself can obviously be serious and severe, but to get that balance right, to continue to ensure that sustainable play takes place within the licensed environment is really important. So we've obviously looked to engage and to make representation so far in the process, and we'll continue to do that.
Before I let you go, you obviously sponsor a number of football clubs, including Glasgow Rangers and Middlesbrough. How much of a hit to the business is phasing out that sponsorship going to mean?
Yeah, look, the Premier League have made a decision to take a voluntary change with the way that gambling companies can sponsor on the front of shirts. We're really proud of our model of sponsorship. We have two key aims when we sponsor clubs. The first is that we invest in the club and its community to drive benefit there. So our partners have been able to scale up a lot of efforts around mental health in their communities, etc. And the second is that we've used the most prominent assets to promote safer gambling behavior. You know, we've gone from a couple of years ago somewhere between 20 and 30% of our customers using safer gambling tools to now well over 50%. And there's no coincidence there that we've been putting safer gambling messages and the use of control tools on the front of shirts, etc. So, you know, we think that there are ways that football and gambling should continue to work together, and that can be for the benefit of the football clubs, and it can be for the benefit of their communities, but also for the benefit of achieving an environment that's sustainable for gambling as well.
OK, Neil, got to leave it there. Appreciate you joining me today. Thanks very much.
Thank you.
Some other business news stories for you now. And a strong showing in China and other emerging markets have helped AstraZeneca to better than expected results during the first 3 months of the year. The drugs giant reported sales of $10.9 billion for the quarter. That was unchanged on the same period a year ago. However, stripping out the impact of COVID vaccines, where demand has fallen, sales were ahead by 15% year on year. Pascal Soriot, AstraZeneca's chief executive, said he was impressed by the growth and pace of innovation he was seeing in China, which underscored the competitive advantage of the company's leading presence there. Well, AZ continued to enjoy strong sales growth among its blockbuster cancer treatments, but Farxiga, which is its medication for type 2 diabetes, heart failure and chronic kidney disease, also grew sales by 37% during the quarter. The household and consumer goods giant Unilever said this morning that it expects to raise prices less aggressively during the rest of the year. The company, whose brands include Persil, Dove, Magnum and Marmite, said that inflation would add around €1.5 billion to its costs in the first half of this year before being significantly lower in the second half, which would mean price increases would taper off. But the company stressed it did not expect to see cost deflation. Well, Alan Jope, the outgoing chief executive, said Unilever had only passed on around 3/4 of the cost increases it had been experiencing to its customers. Sales during the first 3 months of the year rose by 10.5% on an underlying basis to €14.8 billion, which was better than expected. A strong performance from its credit card business and its UK retail banking division helped Barclays raise pre-tax profits periods during the first 3 months of the year by 16% to a better-than-expected £2.6 billion. Well, that was despite the lender having to set aside £524 million to cover loans it does not now expect to be fully repaid, chiefly among US credit card customers. Well, the bank's ring-fenced UK arm saw its profits in the quarter rise by 30%, thanks to an increase in the net interest margin. That's the difference between what it charges borrowers and pays deposits on the back of the Bank of England's interest rate rises. Well, Barclays said its income from consumer loans had fallen as customers had reduced their borrowing and taken a more prudent approach. And Sainsbury's has reported a drop in full-year profits as the benefits of COVID-driven grocery sales unwound and the company failed to recoup all of the cost inflation it has been incurring. Pre-tax profits during the year to the 4th of March fell by 5% on an underlying basis to £690 million. Well, Simon Roberts, the chief executive, said this also reflected the fact that Sainsbury's had spent more than £560 million on price cuts during the last 2 years. He said that as a result, the UK's second largest supermarket was the best value compared with its competitors than it had been for many years. Now, last year was a tough one for Klarna as the fintech company saw its valuation cut from $46 billion to $7 billion in its latest funding round. The specialist in buy now, pay later services also racked up a $1 billion loss. But undeterred, the company is today announcing the first of its twice-yearly product updates. Well, joining me now is Sebastian Siemiatkowski. He is the founder and chief executive of Klarna. Sebastian, good to see you this morning. What jumps out at me here is that you're looking beyond BNPL services.
Yeah, very much so. And thank you for having me back. But it's actually been part of Klarna for a long period of time, right? I mean, over a third of our transactions are already debit transactions, pay now transactions. And we have for a long period of time believed that financial services are going to transform dramatically over the coming decade. Basically becoming this, AI-powered digital financial assistant that helps you save time, save money, and make you less worried about your finances. When I heard you referring to that Barclays profit, I was just thinking again, I mean, it's amazing the excess profits that exist in this industry. And it's been because of the lack of customer mobility, lack of proper competition due to the high barriers of entry. We're now using the AI tools, and Klarna has 150 million consumers start offering more and more richer services in product search, in product discovery, in retail banking associated products. And it's very, very exciting since there's so much opportunity to bring better services to consumers in this area.
You mentioned using AI more to personalise shopping counsel for consumers. Give me an idea in practice what that might look like.
Well, I think, the vision of Klarna since 2015, when we pivoted in this direction, was already back then AI, right? So we had this idea that where are banking services eventually going to end up? And we thought one day you wake up in the morning and your computer will tell you, a digital financial system will tell you, hey, I've analyzed your mortgage, or I've analyzed your spending, or I've analyzed your electricity bills, or whatever it might be. And I realized that I could save you X pounds, let's say £10 on your mortgage a month, by switching from bank A to bank B. And best of all, I'll do all the paperwork for you. The only thing you need to do is to say yes. And so when you think about that, you realize that's going to happen. That's the direction of financial services. What it also means is the end of those excess profits that you were referring to in Barclays. Those excess profits are gone. Banks have been obsessed, as you said, about maximizing interest rate spread. So giving you as little as possible on your deposit bank and maximizing your cost of your borrowing. Now, that's not possible in the world where you have a digital assistant that helps you and can move and help you move between different providers. And that's the world we're moving towards. And obviously for Klarna then being active in this industry, we want to be that digital financial assistant. And so when we now started seeing things like ChatGPT, OpenAI, we were like, wow, things that we thought would take maybe another 5 to 10 years to accomplish, we actually see can be accomplished in, a few years. So it's super exciting. I think we're applying AI now in 14 different services. Internally, we're doing tons of different projects and initiatives, and we're exploring the technology. And I am amazed and surprised. And I think it's going to have very, very real implications on all businesses, and much faster than anything we've seen before. I expect to see very, very major implications already 1 or 2 years from now. And you've got to remember, this comes from somebody who was like always very skeptical of new stuff. Like I've been, skeptical about crypto for 10 years and still is. So I'm not the person that usually would be alarmistic about new stuff, but this is different.
You mentioned there that you are partnering with ChatGPT, but as you say, you also have your own in-house AI capability. How much are you spending right now on that?
A lot, and increasingly so, right? We've also have fantastic talent that has experience from this from all over the world, not the least China, which is, if you take as an example, when it comes to product recommendations and product search, in the Western world, we're still used to searching, while we're not blown away by recommendations of products to ourselves. Like if you look at China, a few years ago, when it comes to e-commerce, 80% was search-driven and 20% was product recommendations. Nowadays, you open the Chinese e-commerce apps, 80-90% is recommendations. So it's products finding you, saying like, this is an awesome product for you. And only 10-20% of the purchases actually comes from search, right? So that's, you see how far and advanced that AI has become to help you find the products that are relevant for you. And that's why it's obviously very keen to us, because a massively growing part of our business is matching consumers to new brands, to new products. This is our fastest growing revenue line. It's growing over, a few 100%. It's becoming a very, significant piece of our business. And it's obviously because customers have decided to entrust a lot of data with us. We understand those consumers really well, and their preferences, their brands that they like, the products that they purchase, and so forth. So that makes us very, very well suited to serve these use cases.
Briefly, Sebastian, before I let you go, you committed late last year to trading profitably this year for the first time in 3 years. Are you going to be able to do that with all this money you're spending on AI right now?
Yeah, and the thing is also AI is making us so much more efficient. I think one thing that I feel maybe tech leaders in the world should be a little bit more honest about. I mean, Goldman Sachs made this estimate of 300 million jobs that could potentially be at risk. I don't think that is unrealistic. I think that this is going to change. It's hopefully going to make for more fun work, less, boring work, and so forth. But I do think it will have a significant impact on the composition of jobs. And as a consequence, I think, politicians and leaders across the world should also think about, it's easy to say there will always be new jobs created, but I was in Brussels the other day. There's 7,000 translators working in Brussels. DeepL is so good at translation. You don't really need those 7,000 translators anymore. And if I'm a 55-year-old translator in Brussels, I'm not going to become a YouTube influencer. So I think, we have to also think from a bigger picture here. How are we going to support people who are going to be affected by these? I think that's very critical. But for Klarna in particular, for us, yes, we are reaching profitability. We have aspired, and we think we're going to be able to accomplish that by summer. We're very close to that. We have, a year ago, we booked a negative EBT of about $150 million on a single month. We're now down to about 30, and we are seeing very, very positive development on all our gross profit metrics across established markets, new markets like the US, UK, and in the same time, we've also obviously had to take the tough decision of making reductions in the number of employees and so forth about a year ago. So we're trending really well, and we're expecting to see profit somewhere around summer.
All right. Always good to talk to you, Sebastian. Thanks for joining me today.
Thank you for having me.
Bit of breaking news to bring you. The union ASLEF has just announced that train drivers are to stage 3 fresh strikes in its long-running dispute over pay, including on the day of the FA Cup final on the 3rd of June. More on that throughout the morning here on Sky News. But in the meantime, still to come here on Ian King Live, we'll have a look at how global markets are doing this Thursday morning. Stay with us.
the medals and then we can talk about them.
So we start with the
That's the
main
Bounty.
piece. That's a cross-section of the Bounty. We've got Malteser, Twix.
Let's do it slowly. Maltesers, Twix, Bounty.
A Bounty.
Chocolate.
Galaxy.
Yeah, Galaxy.
A Milky Way.
Milky Way, of course.
And a Snickers, I think, at the end.
Snickers at the end.
Yeah.
And what about on his lapels?
So the epaulets.
Epaulets,
We
forgive
have.
me.
I kept making that mistake.
Yeah, sorry.
We got Bounties and Galaxies and Milky Ways and Twix, and you can see in the collar, which was the trickiest bit, a whole line of Milky Ways and the ends of the Maltesers, which I've used up the ends that we cut to make the rope.
So these are Maltesers.
Yeah,
The
all
rope
the
is
roping
Maltesers,
is
and the bits
Malteser.
you cut off, you put around the collar at the top.
That's right.
And you styled it on looking at hours and hours of footage of him.
Yeah, that's right. Yeah, and then from there made lots of sketches. And Tim Simpson, the sculptor, created the head in clay first. So we had to get that just right because obviously everybody knows what Charles looks like. We didn't want to get that wrong. And then created a mould, and I cast it in chocolate. And then we used, nearly 17 litres of melted celebration chocolates to make the body.
What are you going to do there?
Well, hopefully we're going to share it with everybody, and
So you're going to take it along the route on the day, or who you're sharing it with?
we're not quite sure yet. But I think
Exciting,
we've
though,
got
isn't
lots of people to show it to first.
Yeah. And is it solid?
This is solid.
Okay.
Solid with
You're not saying our
celebrations.
king's an airhead, are you?
Well, there is a little bit of it.
There we
Room to breathe. Should we say.
There, exactly that. Amazing. How much do you think it's worth?
No idea.
Oh, priceless.
Yeah. To me,
Thanks
it
for
is.
bringing it in. I know it was an absolute schlep, but my goodness me, absolutely superb.
Time for a look at this morning's business pages. Little debate about what the big story of the day is. The Financial Times leads its print edition with Activision Blizzard's fury at the Competition and Markets Authority for blocking its takeover by Microsoft. The paper's Lex column says the decision will have little impact on Microsoft's profits and says shareholders in the company should not be concerned. The FT is currently leading its digital editions with its own interview with the CBI's new Director General, Rains Newton-Smith, in which she tells the FT the employees' organisation is likely to have to change its name. Well, the Times also leads its business pages with Activision Blizzard Microsoft. Its business columnist Alistair Osborne indicates he thinks the CMA has made the right decision. The paper also reports on last night's results from Meta Platforms, in which the owner of Facebook and Instagram reported its first quarterly sales growth in nearly a year. Well, that story also makes the front page of the Daily Telegraph's business section, but the paper leads with the report on the embattled Californian lender First Republic's attempts to secure a rescue deal, following a fresh plunge in its share price that reignited concerns about the health of the US banking system. Well, joining me today is Thorold Barker. He's editor of the Wall Street Journal for Europe, the Middle East and Africa. Thorold, good to see you this morning. Obviously, the big story right now in the US is the goings-on in Congress to try and reach a settlement over the US debt ceiling.
Yeah, so this is, it might sound a little arcane to viewers here in the UK. It's basically in the US, there's a ceiling to the level that debt can rise to, and that has to be raised by Congress periodically as debts grow in the US. And there have been standoffs in the past, and this one is looking quite spicy, potentially, where the Biden administration is refusing to tie cuts in spending to, so the Republicans want cuts in spending in order to raise the debt ceiling, and the Biden administration is refusing to link those two things together. So at the moment, there's a standoff. I think most people in these situations think that the US is not going to risk its position as one of the great credits in the world by defaulting on its debt. That said, in 2011, when I was living in the United States, there was a debt ceiling standoff, which did get very tense, and S&P actually downgraded US debt because it got so tense, and markets reacted pretty aggressively back then. So there is precedent for some market turbulence on the back of this.
Yeah, I remember it well. But, I mean, the interesting thing is the markets do seem quite sanguine at the moment that there will be some sort of agreement reached.
Yeah, because historically, I mean, there's always been this tension. There's always been this attempt to, use it as a way to rein in spending by the Republicans. That's not an uncommon situation, and usually it gets resolved because nobody really wants to default on US debt, obviously. So I think that the challenge this time is in the House of Representatives, the Republican majority is already very narrow, and Kevin McCarthy, the Speaker, is trying to keep that majority together. So, there's a dynamic here that is more complex than usual.
I mean, the countries like China have for years resented the fact that the dollar is the reserve global currency, that it really is a form of US hegemony. I mean, the Americans would be mad to risk throwing that away, wouldn't they, and potentially opening up the world to other currencies.
I think the logic of that is not lost on everybody, for sure. But again, as we know here in the UK, political debates can end up going to places which aren't necessarily economically sensible. So, I think, the chance that this ends in a US default, I think is very, very, very small. I think the risk that there's a lot of nerves as we get closer to the date where it really begins to get serious. There is definitely the chance that markets start to get a bit more volatile. And you're already beginning to see in the bond market, people are buying short-dated bonds that mature before the summer, when people think that the limit will really be hit, and not keen to buy the bonds that mature in the summer. So there's a bit of a distortion going on there already, and the US is already taking special measures to not hit the debt ceiling. So like not investing in the civil service retirement account and stuff like that. So there's already special measures happening, and we're not entirely sure when exactly you hit that point where you hit the debt ceiling.
Briefly, Thorold, what about Microsoft, Activision Blizzard? I mean, I think it's intriguing that some commentators are saying, well, look, Microsoft doesn't really need this deal anyway. I mean, its numbers on Tuesday night were so good.
Yeah, look, Microsoft is obviously this enormous company now, so this is only a part of their business. That said, this is the biggest deal that they've ever tried to do, and it's something that they're putting a lot of money, time, and energy into achieving as they try to build out this streaming service on their Xbox platform. So, most things in the scheme of Microsoft are going to be small because of the scale of the company. But this is a pretty serious strategic thing for them, given the scale of this deal.
All right, Thorold, got to leave it there. Good to catch up with you this morning. Thank you.
Thanks very much.
Bit of breaking news to bring you. During the last few minutes, Pat Cullen, who's the General Secretary of the RCN, the Royal College of Nursing, she's also the Chief Executive, she's been speaking at the High Court ahead of a legal hearing about the nurses' strike action. Let's hear what she's had to say.
No, absolutely do not. The courts will decide the outcome for today. But what I would say is that Steve Barclay may get a legal win today. But what he has done is he has lost the public and he has certainly lost nursing. So he has a short-term gain, but long-term, there's no trust whatsoever from any of our nursing staff now in this government, and certainly the public. If you look at what the public are saying, we are the most trusted profession, and we're being dragged through the courts by the least trusted group of people in England. Now, what does that say about this country and about the people that's leading it? The people of this country know better, and they deserve better. And they certainly didn't think that the claps of this government would turn to slaps, and slaps in the courthouse very quickly. This is no way to treat our nursing staff, the people you see standing here today, and any other country throughout the world would say the way to do this is through conciliation and negotiation, not dragging our nurses through the courtroom.
Well, the oil price suffered another major sell-off last night. It hit its lowest level for a month on the back of rising fears over a possible US recession and news of a rise in Russian crude exports. It's rallied a little bit this morning. Barrel of Brent crude currently changing hands at $77.99 a barrel. That's up a little over 1/3 of 1% on the session. On the equity market, stocks in the Asia-Pacific region had a largely positive session overnight. Only Sydney and Singapore, they were the only decliners in the region. In Europe, stocks have also been trading largely to the upside this morning. As you can see, all of the main continental European indices in positive territory right now on a huge day for company results. Talking points include Deutsche Bank. Its shares ahead by some 2.75% in Frankfurt on the back of better than expected quarterly results. Well, here in London, the FTSE 100 is more or less unchanged right now. Again, there are a huge number of results to digest. The leading blue chip gainer just now is Barclays. That's on the back of its results. Very upbeat trading statement. I thought the shares up 4.5% there. Unilever, which I mentioned earlier in the programme, that is also trading to the upside, some 1.75% to the good. Meanwhile, the distributor RS Group is ahead by 2.5% as news of an acquisition has been well received. To the downside, the advertising giant WPP is off 2.75% on its results, while a number of FTSE heavyweights have gone ex-dividend today. In other words, they've adjusted lower to reflect the fact that they're trading for the first time without the rights to the latest payout. Lots of them in the FTSE today. Those going ex-div today include Relex, Legal & General and Rightmove. You can see on the screen there, that's off 1/3 of 1%. Fresnillo is another one. The silver miner, that's off 1.75%. Don't worry if you're a shareholder in that. It's just because it's gone ex-dividend today. Outside the FTSE, Capricorn Energy is off by nearly 10%. That is after it posted a big operating loss. But Drax Group, the power generator, is topping the FTSE 250 leaderboard for a second day running on enthusiasm at its announced share buyback programme. The shares 0.75% higher just now. On the FX markets, well, the euro has come close today to its highest level against the US dollar for a year. Sterling unchanged more or less against either the dollar or the euro. Well, joining me this morning is Dani Saurymper. He's a fund manager at Pacific Asset Management. Dani, good to see you this morning. Let's start with AstraZeneca. Very, very confident trading update. The share price hasn't really moved.
Yeah, I think that reflects a bit of a travel and arrive situation. The stock had been performing very well in the run-up to these results. A very strong set of results, somewhat massaged a little bit by some one-time income phasing there, but overall a very impressive set of numbers. And we look forward now to some significant pipeline news flow, particularly around its oncology drugs that are in development, and that should be coming this quarter and later in the year.
Absolutely. I mean, it feels on the pipeline that the good news just keeps on coming from this company.
Yeah, under Pascal Soriot, it's been a tremendous turnaround and success story. It's not that long ago Astra was subject to a takeover approach from Pfizer, and now AstraZeneca's market cap is higher than Pfizer's. So, he's done a tremendous job bringing that company forward, bringing through new product pipeline, and that's driving future success for the company.
Yeah, now yesterday, of course, we heard from GSK, Astra's big rival, and again, a company that a lot of investors had fallen out of love with in recent years, but now rekindling their affections.
Yeah, I think there's still a big underappreciation of the change that has been effected under Emma Walmsley, their CEO. The company absolutely delivering on its numbers yesterday, also very much committed to its better than 5% top-line growth and better than 10% earnings growth in the coming years. And I think there's a much growing or better appreciation of what they're doing with their pipeline. They just this morning got a positive recommendation from the European regulator for its RSV vaccine, which is a multi-billion-dollar opportunity, as well as then other business development that they've been very active on. Not least more recently, they made an acquisition of a small US biotech company for $2 billion.
Now, also today, we've heard from Unilever. Alan Jope, of course, bowing out as CEO. Well, he's gone off on a reasonably good note, hasn't he?
Yeah, I mean, again, Unilever and, in fact, the broader consumer staples group have been delivering as promised in terms of being able to put through quite significant chunky price increases without too much impact on the volume side of the equation. Unilever's results flattered a little bit today by a pipeline stock in on deodorant sales, but overall a very good set of numbers. And again, they've been continuing to push through price, and the consumer seems to be being able to absorb that just right now.
All right, Dani, I'm afraid we've got to leave it there. We're a bit pushed for time today, but hopefully see you again soon. Thank you.
Thank you.
Well, the UK's electric truck sector suffered a blow recently when Arrival, one of the leading start-ups in the sector, scrapped plans for electric cars and buses and announced it was cutting 1,000 jobs in an attempt to save money. But that doesn't mean electrification in the sector is flagging. Biffa, the waste management company, has today announced a contract with Silverstone-based Lunaz to convert the first 10 of its 2,900-strong fleet of diesel lorries to electric. Well, joining me now to talk about this is the Chief Operating Officer at Biffa, Maxine Mayhew. Maxine, welcome to you. How long does it take roughly to convert a diesel truck to electric?
Well, there's a huge amount of activity, as you can probably imagine, and the team here at Lunaz do a great job doing that. it takes probably several weeks, about 5 weeks, to actually make that actually come alive and get an upcycled truck. So for having been diesel right through to being a fully electric zero-emission truck.
And how much will it cost you to convert the entire fleet?
Well, as you've already said, our current fleet is around 2,900 vehicles. That's a lot of vehicles. What we're planning to do here is obviously, as vehicles get to the end of their useful life, we will work with Lunaz to have those have another lease of life, so to be upcycled and recycled into a fully electric truck. So it's going to take a long time, but the reality is that the cost effectiveness of doing this, both in terms of emissions, but also in terms of day-to-day running, absolutely makes it worthwhile for us.
I presume that is far more cost effective for you than buying all new trucks.
Yeah, and it's really great to kind of break that cycle of always having to replace with new when you get to the end of life of something. You know, we work with our customers to help them recycle, reuse and reduce their waste. So it's only right that we do that with what is core to our business, and that's our collection fleet.
I mean, these are big beasts. I remember with affection driving a bin lorry around a racetrack some 20-odd years ago. I mean, the batteries that are required to power them are huge. Can you do this without any loss of efficiency or performance?
Well, obviously for us, making that transition from our traditional diesel fleet, it's really important that what we end up with is as reliable, can do the duty and manage everything we need to from collections. And this isn't just about transforming a 26-tonne vehicle. This is about all of the clever stuff at the back end that allows the compacting and the physical collection of recycling and refuse materials. So, you know, what I'm really delighted about working with Lunaz is they've done a lot of trial and testing to make sure that we absolutely continue to get what we need in terms of quality so that we can service our customers as you'd expect us to. So, you know, you can see one of the trucks behind me today. They are indeed big beasts. I haven't had the chance to take it around Silverstone, maybe one day, but actually you can see how much needs to happen to make that be an electric truck.
And in terms of charging, are you having to install facilities at your depots to that end?
Well, obviously, to have an electric truck work, you need to be able to charge it, recharge it. So yes, we are continuing to invest in our charging infrastructure across some of our key depots to make sure that actually we can use these vehicles where they make most sense and most effective for us, help us with our route efficiency and kind of drive the best overall impact, having electric fleet as part of our overall fleet.
And before I let you go, Maxine, obviously Biffa was bought last year by Energy Capital Partners, a private equity firm. Has much changed within the business, apart from all these wonderful initiatives you're carrying out like this one?
Well, as you can see, we're carrying on with our business plan and our trajectory as a business. It's great that we continue to invest in innovation, continue to innovate to make sure that we move forward as a business. So, you know, ECP recognise the strength of the industry, the strength of our business, and that's why, you know, they took us private. So, you know, things are changing, but they're things that are on our business plan and our growth journey as a business generally.
And crucially, the trucks remain scarlet, of course.
Absolutely. We've got our Biffa red through and through, so look forward to seeing them on a road near you.
Excellent. Well, look forward to seeing you again, Maxine. Good to see you this morning. Thank you. Now, according to the Office for National Statistics, between September last year and January this year, 1 in 6 of the workforce was still working solely from home, while more than 1 in 4 were splitting their working time between the home and the office. But with a growing number of employers wanting colleagues back in the office full-time, they're having to think about the office environments people want these days. Well, it's something on which the global design and architecture firm Gensler has been working. And joining me now to talk about this is the strategy director at Gensler, Jane Clay. You've done a lot of research, Jane, on this. What makes people want to come into the office these days?
It's really about community and being back. I think really people want to get back to normal. The idea of coming back to the office is really around people's strength of community and culture. People want to come back to get on with work is effectively what it's about.
What are the amenities that people want in the office these days?
Interesting question. There are a number of things that people are asking for. What they're really asking for is choice. And with that comes things like, surprisingly, rest and nap spaces has come out #1. And by that, we don't mean people want a bed in the office, funnily enough. What they actually want is space to get away from machinery, space to get away from phones, space to just be quiet and do something other than work. Because that's about the work style, lifestyle blur that people expect now from the workplace. Also things like library spaces, They expect, obviously, a cafeteria, but they expect much more choice in those amenities. And that's something that not only organisations need to think about and designers need to think about, but it's also something that developers and landlords need to consider when they're looking at developments, particularly in the City of London.
Absolutely. I mean, is this largely millennials and Gen Zers, or is it also cynical old Gen Xers like me?
No, actually, surprisingly, it's everybody. The older generations are less likely to work from home, and they have more presence in the office. And because they've got used to working from home, they actually have got used to having choice as well. So they too want choice in how they spend their time in the office.
What about the employers themselves? I mean, from what you're saying, this is going to involve a hell of a lot of investment.
Not necessarily. I think that it's about transforming some of the spaces you already have and using them more wisely. For instance, a lot of organisations used to spend a lot of money on large meeting spaces. What we are finding from some of our other research is that large meeting spaces just don't cut it. People want more intimate spaces. So it's quite easy to transform something large into something smaller. Also, I think it's about just designing for flexibility from the get-go so that you can easily change and adapt something. So the investment doesn't always have to be high.
What sense do you get that company management are actually moving with their workers on this? Are they being led by the workforces?
That's also a good question. I think that if management don't respond to what their workers want, then they will lose talent eventually. I think there was a wonderful quote from somebody at PwC who said, "The war for talent is over, the talent won," which I think, whether one believes that's true or not, it's also something to watch out for, because younger generations certainly have a sense of, a career isn't forever. So they're much more likely to say, I have better choice, I have a better environment, I have a better lifestyle, work-style balance somewhere else. But I think it behoves us as employers and managers of people to look at what they really need for their own health, their own mental well-being, and actually issues around neurodiversity, actually what people need to do their best work and be their most productive selves. We need to look at that.
I find all this absolutely fascinating, the fact that you're talking about the need for quiet spaces and things like this, because when I entered the workforce 30-odd years ago, it was all about open plan. Everyone was going open plan. Offices boundaries were being knocked down. It kind of feels like the cycle has turned a little.
It has, and funnily enough, I entered the workforce at the same time as you. So I've seen it all, and obviously designing these spaces, we go through cycles, but I think it was inevitable that it would come back to the issue of choice, particularly, during the pandemic, people have got used to choice in how they worked at home. You could be at your kitchen table, you could go and work on your sofa. Fundamentally, that's all people are asking for from the workplace, essentially, is that they want to have choice in how they do their work in an environment that enables them to be their best. And I think if we enable them to do that, that's going to give you better business performance, because you enable people to be more productive in the way they want to be productive. So I think it's been an inevitable change, and the pandemic just helped us nudge that along a bit faster.
All right, got to leave it there, Jane, I'm afraid. Good to see you this morning. Thank you. Now, a reminder to you to check out the Ian King Live podcast. You can find that by scanning the QR code on your screen now. It's available now wherever you get your podcasts, including the Sky News app, Apple and Google Podcasts, and Spotify. Well, still to come here on Ian King Live. How rising cost pressures are leading some farmers to diversify in unusual ways. Don't go away.
Of the medals, and then we can talk about them.
So we start with the main piece. That's a cross-section of the Bounty. We've got Malteser, Twix.
Let's do it slowly. Maltesers, Twix, Bounty.
A Bounty.
Chocolate.
Galaxy.
Galaxy.
A Milky Way.
Milky Way, of course.
And a Snickers, I think, at the end.
Snickers at the end.
Yeah.
And what about on his lapels?
So the epaulets.
Epaulets.
We have. I kept making that mistake.
Yeah, sorry.
We got Bounties and Galaxies and Milky Ways and Twix, and you can see in the collar, which was the trickiest bit, a whole line of Milky Ways and the ends of the Maltesers, which I've used up the ends that we cut to make the rope.
So these are Maltesers?
Yeah,
the
all
rope
the roping
is
is
Maltesers, and the bits
Malteser.
you cut off, you put around the collar at the top.
That's right.
And you styled it on looking at hours and hours of footage of him.
Yeah, that's right. Yeah, and then from there made lots of sketches, and Tim Simpson, the sculptor, created the head in clay first. So we had to get that just right, because obviously everybody knows what Charles looks like. We didn't want to get that wrong. And then created a mould, and I cast it in chocolate, and then we used nearly 17 litres of melted celebration chocolates to make the body.
What are you going to do there?
Well, hopefully we're going to share it with everybody, and
so you're going to take it along the route on the day, or who you're sharing it with?
We're not quite sure yet, but I think we've got lots of people to show it to first.
Yeah. And is it solid?
This is solid.
Okay.
Solid with.
You're not saying our king's an airhead, are you?
Well, there is a little bit of it, room to breathe.
Exactly that. Amazing. How much do you think it's worth?
No idea.
Oh, priceless.
Yeah. To me, it is.
Thanks for bringing it in. I know it was an absolute schlep, but my goodness me, absolutely superb.
Global insight, made local. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor.
Welcome back. Now, the pressures facing the farming industry have been well documented. Many farms are struggling to trade profitably even before Putin's war in Ukraine caused the price of energy, fertiliser and animal feedstocks to rocket. As a result, many farmers have sought to diversify away from their core activities. Well, among them is Jason Barber, a fifth-generation dairy farmer in West Dorset, and his friend and neighbour Paul Archard. The pair hit on the idea of distilling vodka from milk, and Black Cow is now being widely distributed. I'm very pleased to say Paul and Jason join me now. Welcome to you both. Jason, let me start with you first. When did you hit on the idea of distilling vodka from milk?
Well, basically, if you have milk cows, that drives you to drink. And then you've got to get up in the morning. So we wanted to make a vodka which is nice, clean and smooth and soft, which milk is a great product and very underutilized. So, yeah, we started to make it from milk, and it's very clean and very smooth.
I gather that the technique, the process is many centuries old.
Yeah, Arch?
Yeah, that's correct. Nothing's new, as we know. And in Mongolia, Kyrgyzstan, Kazakhstan, nomadic tribes have been making a treat on a Friday night out of what's left over from their milk, because in cold, arid climates, you can't grow crops which have enough sugar and they subsist on their milk. So this goes back 5,000 or 6,000 years. Genghis Khan's hordes would take this with them as they went across Europe.
Well, I hope your customers aren't carrying on like Genghis Khan and his gang did. I mean, what was the thinking behind the Black Cow brand? You had to launch the brand and come up with this. What did you get? What went into that?
Well, we thought, what's the simplest name that symbolises our brand and that will work well internationally as well, because we've always got our eye on other regions. And I've noticed that a combination of colours and animals seems to work quite well for a lot of other brands. And the cow is where our single source product comes from. It just comes from cow's milk, nothing else. And black is a sort of the luxury limited colour. So there are lots of other we've taken our cues from a lot of people, black editions of things. And it's a great music track by Steely Dan as well.
Right. Jason, what about, has this enhanced the sustainability of your business, financially speaking?
It helps, because I'm spending less time on the farm and doing more things here. So, you know, you can keep your labour short down at the farm. So yeah, no, it all helps, definitely.
You're also, you sell a lot of cheese as well. What's the proportion of turnover now accounted for by the vodka brand?
Well, it's about 90% vodka and about 10% cheese.
The great thing about our product is that it's made from what's left over from cheese production. So it's not only the smoothest vodka in the world, it's also the most sustainable, because it is made out of a very under-resourced product, which is whey, which is left over when you make cheese. So it kind of ticks a lot of boxes.
And what would you have previously done with all that whey?
Well, years ago, we would have fed it to the pigs. The pigs, you know, their muck would have gone on the ground to make the grass grow. Cows eat the grass, and you make your cheese to feed the whey back, and that was the sort of Dorset-Somerset cycle. So we think we got a better use for it.
Paul, what about, I mean, it's a fascinating concept, and as you say, one that's centuries old, but did you encounter much scepticism in terms of trying to bring it to market?
Well, we did, and in a way that's really good, because it's slightly provocative. You know, we'd say, people go, well, I can't believe it's made out of milk. And then they'd try it. And a lot of people have got very in love with gin over the last few years. And people are coming back to vodka and they go, you know, I'm not really a vodka drinker, but I can drink this. It's so smooth. And this is what we find time and time again when they try our product. So it's that initial, is this quite right? And then they try it. And we're winning a lot of hearts and minds and palates with our product because of it.
We've only got about 20 seconds left. Are you mainly distributed through the off-trade right now?
We're off-trade and on-trade. We're in most major supermarkets, and we've now signed a distribution deal with Molson Coors, who are the biggest drinks distributors in the country. So this should really open us up to some exciting commercial possibilities in the next year.
Yeah,
nationally. Well, it's fascinating. Guys, we're out of time, I'm afraid. Thanks very much for joining us. Good to see you both.
Thank you so much.
That's it from me. I'm back tomorrow morning at 10 o'clock. Hope very much to see you then. Jane Secker's up next. Do stay tuned for all the latest, including that RCN court case and the gambling white paper. Cheerio.